A major concern for most people looking to buy real estate is financing. I wanted to dedicate this video to answering some of these questions to hopefully boost your confidence on the matter and even influence you to take action. The first question, how do I get pre-approved for a mortgage? This question is common among first-time homebuyers. Getting pre-approved is relatively a painless process. If you don't know any mortgage brokers, then the bank or credit union where you already have an account is a great place to apply for a loan, since they'll have access to a lot of the information they'll need to pre-qualify you. Once the institution reviews all pertinent information and you get the green light, you will receive a pre-approval letter stating the qualified amount. Typically, this approval letter will be valid for up to 3 months. Most real estate brokers will want to have a copy of this letter prior to showing you properties. The next question, what are my financing options? Of course, you already know that a mortgage is an option, and there are a ton of mortgage products available to you if you're going this route. You may already have a mortgage on 1 or 2 properties and consequently exceed the debt-to-income ratio most lenders require. If this is the case, you're going to need creative. A cash-out refinance is an option for those who have substantial equity in existing property. Banks will typically lend up to 80% of the fair market value. You could then use this cash to purchase your next property. If you have a self-directed IRA or a permanent life insurance policy, then this is another possibility as a source of funds. Some self-directed IRAs allow for investment properties to be held within it, but must strictly be investment properties. You or your immediate family cannot occupy the property. This is a tricky option with considerable tax implications, so consult with your CPA prior to undertaking this route. As for your life insurance policy, this is a quick way to get cash for your next project. These funds are borrowed against a death benefit and the policy is used as collateral. The best part is the IRS doesn't consider this income, thus it's tax-free. If this idea intrigues you, be sure to reach out to your insurance agent for specific details. Portfolio loans are a good option if the property doesn't fit conventional lending criteria. You may have access to this option if you have an existing relationship with a community bank or credit union. The next question, if the property has existing tenants in place, can the rental income be used to secure the loan? It depends on the lender, but from what I had learned from a trusted mortgage broker, the underwriter will consider a combination of your personal income and 75% of the gross rental income of the property. As long as you can prove the rental income will continue and it's less than a 4-unit building that you intend to live in as well, then this could be done. Next question, how much should I expect to pay in closing costs? These costs differ from buyer and sellers. If you're a buyer, expect to pay around 3 to 5% of the purchase price. These fees are broken down by lender fees, third-party fees, and homeowner and prepaid costs. The largest cost to the seller will be paying the real estate commission, which is typically 6% of the purchase price, and it's split between a listing agent and buyer agent. Sellers also pay a transfer tax. In New York, this tax is calculated by $2 for every $500. New Jersey is a little more complicated than that and is roughly less than 1% of the purchase price. I hope I answered some of your questions concerning financing and boost your confidence a little bit more. If you have any additional questions, feel free to comment below and I will answer the questions promptly. Thank you and have a great day.